When diving into the exciting world of Forex trading, it's crucial to understand the most volatile currency pairs. These pairs can offer substantial opportunities for profit due to their significant price movements, but they also come with heightened risks. Let's take a closer look at some of the most volatile Forex pairs so you can be better prepared to navigate the market. By the way, if you are looking for a reliable broker with very low deposit requirements and quick withdrawals, see the links in the description box below. First on the list are the EUR TRY, Euro Turkish Lira, and USD TRY, US Dollar Turkish Lira pairs. The Turkish Lira is notorious for its volatility, often influenced by Turkey's political and economic climate. These pairs can swing wildly, providing both thrilling opportunities and challenges for traders. Next, we have the GBP ZAR, British Pound South African Rand, and USD ZAR, US Dollar South African Rand pairs. South Africa's economy, heavily reliant on commodities, can cause the rand to fluctuate dramatically. If you're looking to trade pairs with strong movements, these are ones to watch. The USD RUB, US Dollar Russian Ruble, pair is another roller coaster. The ruble's value can be significantly impacted by geopolitical events and oil prices, making it a favorite for traders who thrive on market excitement. Similarly, the USD MXN, US Dollar Mexican Peso pair is influenced by Mexico's economic conditions and trade relations, offering another avenue for those seeking volatility. The ADJPY, Australian Dollar Japanese Yen, and NZPY, New Zealand Dollar Japanese Yen, pairs are intriguing as well. These pairs reflect the commodity-driven economies of Australia and New Zealand against the stable Japanese yen. The differences in economic stability and interest rates between these regions can lead to substantial price movements. Finally, don't overlook the GBP AUD, British Pound Australian Dollar, and GBP NZD, British Pound New Zealand Dollar pairs. The British Pound's sensitivity to UK economic data and events, combined with the commodity-driven nature of the Australian and New Zealand dollars, creates pairs that can move significantly and provide plenty of trading opportunities. Trading these volatile pairs can be incredibly rewarding, but it's essential to approach them with a solid risk management strategy. By understanding the factors that drive their movements, you can better position yourself to take advantage of the opportunities they present while mitigating potential risks. If you are looking for a reliable broker with very low deposit requirements and quick withdrawals, see the links in the description box below.